Well, good morning then everyone as we head into European trade on Wednesday the 6th of September. We'll have a flick across the headlines, we'll see what is going on. Really after yesterday we obviously saw I'm just reading here, China bans government officials from using iPhones for work. It's maybe interesting. It maybe increases some tensions with the US, but I wouldn't read too much into that just as of now. But apart from that, obviously we saw the negative data from China yesterday does continue in line with that story of Chinese growth slowing, which obviously has a contributing factor in terms of or a large contributing factor in terms of global growth. We also saw the RBA yesterday seemingly going not seemingly, definitely have continued their pause for 3 straight months. No interest rate hikes, but seemingly finished their interest rate hiking cycle. Apart from that, oil yesterday. Now, Russia and Saudi Arabia did cut or extend production cuts through to year end. Million barrels a day from Saudi Arabia, 300,000 barrels a day from Russia, which then continues their production cuts that they have done over the last few months through to year end, which further tightens supply in the oil market, especially with supply tightening in the US with oil inventories decreasing. That is obviously a reason for upside in oil. You saw oil pop higher yesterday off the back of that. Now you gotta think what are the implications from that going forward. I mean, we have a quick flick over to the grid as we can see over here. You can see oil prices up 86.50. I mean, 87 up above 87 towards 88 yesterday. Nearly hit 90 yesterday. Brent was up above 90 yesterday. Obviously $90 a barrel. Now you got to think back to inflation and the work the central banks are doing in order to cool down the pace of inflation. Now, when Russia invaded Ukraine yesterday, that was a little bit longer ago than yesterday, but when Russia invaded Ukraine last year, it caused a massive increase in the prices of commodities, things like oil, things like gas, all these different types of things. Now, if you think about oil just in isolation, now, there's a lot of reasons people would use the price of oil. I mean, you got to think, things like, crude oil is a massive ingredient in things like petrochemicals, which are used to make plastic. So if the price of making plastic increases, or if the prices of oil, have increased, then the fact that oil is heavily used in the making of plastics, anything that contains plastic is going to go up in value. Think about fuel prices with, the cost of oil in terms of fuel price for people heating their homes, people driving their cars. Obviously, the prices for that then rise as well. And think about other things, the cost of making, food. I mean, if for things like farmers need oil to raise animals, to kill animals, in terms of the plants, in terms of manufacturing. You need oil to run these big manufacturing power plants. There's so many things across the board in different industries that require the use of oil in order to power their business or in order for them to conduct business or make goods. So if the price of oil rises, that has filters through into the price of inflation. Now, if oil gets up towards $100 a barrel again and gets above $100 a barrel again, well, it was up at 120 when it was the Russia and Ukraine situation playing out. Now, gas prices were a contributing factor to that as well, which obviously we're not seeing now. But if oil gets up towards $100 a barrel and up above, kind of maybe it hangs out up around $100 a barrel, that is likely to put upwards pressure on inflation. Now, with the central banks all having interest rates where they are up 4 or 5.5% in order to cool down inflation, if inflation begins to rise again because of high oil prices, that puts the central banks in a tricky position. If the central banks are in a position where they've either got to cool down inflation and raise interest rates again to get inflation down, they are then at risk of blowing up the economy with interest rates that are too high. So if that continues and oil prices again stabilize at a higher price, it's not something the central banks will be liking the developments of, and it's something we need to keep an eye on in maybe not the short term over the next couple of weeks, but certainly over the next number of months through the year end. What effect does that have on inflation? Does that continue to push inflation higher? and that is something that the central banks will be watching carefully. Therefore, it's something that we have to watch carefully. And as I said, if it gets up to 100, above 100, that is not not good by any stretch of the imagination. I mean, there's a study by the Federal Reserve, Bank of Dallas, a couple of years back, suggesting that if crude oil prices rose to $100 a barrel for 3 months before retreating, a spike would boost the annual inflation rate by 3 percentage points in the short term, which is not good. I mean, if inflation was to rise 3% in the short term, all it's got to do is stay at $100 a barrel for 3 months, and we are nearly there. So if we're up at 90, 95 for 3 months, well, does that put an extra couple of percent on the price of oil? Obviously, we don't know that much, but oil prices do put upwards pressure on inflation, and that is not going to be good for anyone if the inflation continues to push higher. I mean, it won't be good for anything, will it? Stocks, see them right across the board this morning. They'll be right across the board if that was to happen. You'll see, maybe it could be good for the Japanese yen. Maybe that'll be an alright asset to trade in or asset to buy in that type of environment. But anyways, on to normal markets this morning. Equity futures lower across the board. Asia Pacific equities relatively mixed. Oil has had a slight pullback from the highs, but really direction pretty difficult to work out this morning. Managed to get it right with that dollar strength yesterday, but dollar strength has not continued on into today's session. There was comments from a Fed official, Fed's Walla, yesterday, suggesting that the recent data points out of the US have bought the Fed some time, and they do not immediately need to hike interest rates, and they have a bit of time to think and wait for more incoming economic data before making any decision on interest rates. So the US dollar had a bit of a pullback off the back of that. You saw the Japanese yen strengthen off, US yields lower. That is really where we are at in terms of markets today. You can see a couple little double tops around the place. The Australian dollar has had a pop back higher. Contributing factor to that was Aussie GDP, came in higher than expected, which will have a look at now in a minute. But Aussie, Kiwi, Euro and Sterling having a bit of a bounce back. Not exactly a trend reversal. I mean, it's a couple of double bottoms across here, but now Euro and Sterling look like they want to push lower again. Dollar Swiss pullback, dollar CAD pullback. Obviously a bit of Canadian dollar strength off the back of higher oil prices yesterday, but dollar yen got up this, we got near 148, and has had a pullback. So certainly not central bank intervention, but a bit of a pullback in line with the yields having a bit of a pullback is certainly not unsurprising. And across here, you can see stock indexes not really doing too much in yesterday's session. The S&P, the Dow Jones, the Nasdaq, the Russell having a solid bit of downside yesterday, but the three major indexes not really doing too much. The DAX had that bit of a bounce back towards US Open yesterday, kind of over the course of the majority of the European session, but has moved back lower slightly. Euro stocks moved back lower slightly. FTSE moved back lower. So in terms of direction, you're not getting clear-cut direction across these equity markets. I mean, the only way you're sort of getting clear-cut direction is for rallies to be sold back into, which somewhat messy rallies being sold back into across all of these. But that's seemingly the way to play it there for now. But a little bit difficult markets to work out this morning. A little bit interesting when you look 10-year yield, 2-year yield having another attempt at popping higher. That's likely to put some upwards pressure on the dollar. Oil definitely want to keep in focus after the developments overnight, over the course of yesterday, should I say. But really, it's pretty difficult markets to work out this morning. US dollar, though, probably what I would look for. The US dollar is trending higher across the board. You've got to look to keep buying dips on the US dollar. There will obviously be times where the dips cannot be bought and they don't work out, but got to buy dips on the US dollar. Struggling to work things out. Go with your trends. Look to buy some retracements, and getting a bit of a retracement on the US dollar at the moment. Is it enough to spark fresh upside? Certainly if those 10-year yield and 2-year yield continue to pop higher, US dollar continues to pop higher, and some of these dips are a decent buy. Apart from that, GDP out of Australia didn't really give us what we wanted overnight. Consensus 0.3, consensus 1.8. Oops, I did not mean to click that. Consensus 0.3, consensus 1.8. Actual beat on both of those releases. So hoping for some weak Australian data to go in line with the Dovish central bank chatter. Well, I say Dovish central bank chatter, but they said they will not hike interest rates again if the data does not if the data does not suggest it's needed. Therefore, you are looking for weak economic data to suggest that they will not hike interest rates again. Therefore, they will be left with lower interest rates than a number of other countries in the G8. Gives you opportunities to sell the currency. Apart from that, you've not got a great deal to go off today until you get to the services PMI. You've got Bank of Canada as well. I mean, you have the Bank of Canada out, but you're expecting a bit of a non-event. On that a little bit later on today. I mean, it's not even high impact that data release on this. I mean, it probably should be, but services PMI at 3 o'clock as well will probably be a slightly more important print. But the Bank of Canada keeping interest rates firm, are likely to keep interest rates on hold. Obviously, if you do get a deviation from that 5%, that causes some moves, but you're likely to hear the same old blabber. Interest rates are at a restrictive level. They'll watch the incoming economic data. They are open to tightening policy if needed. They will wait for the economic data to decide that. The same old drip that you've been hearing from the majority of central banks. Likely what you're expected to hear from the Bank of Canada as well. But services PMI. I'm not sure what sort of a number do you want. You probably want something higher to go in line with that US dollar uptrend. Probably a somewhat of an easier trade, but to be fair, in line with those comments yesterday, what's the economic data, or they will not need to hike interest rates at the next meeting, due to the fact that recent incoming economic data has given them a bit of room to breathe. That comes in negative, gives them a bit more room to breathe. Probably is a reason why you could buy stocks and sell the dollar into today's trading session. But I'm going to wrap it up there then. There is a number of things to look at. Buying dips on the dollar for now, unless this changes the picture.